Okay, now I start the class. Welcome, my all dear students. Today discuss the basics of panel accounts of a company. Means this is very important. It is very compulsory to all companies to prepare the financial statement. It is a compulsory to all companies to prepare the financial statement at the end of the year, and also all public company they have to prepare final accounts for quarterly. Means for every year they have to prepare for 3 times. Okay, now what are the final accounts of a company? There are 4 final accounts of a company. First one is a trading account. Second one is a profit and loss account. Third one is a profit and loss appropriation account. And the fourth one is a balance sheet. There are final accounts of a company. What are those? First one a trading account. Second one a profit and loss account, and the third one is a profit and loss appropriation account, and last one is a balance sheet. Generally these statements are to be prepared at the end of the year. It is a compulsory, it is a mandatory to all companies, whether it is a private company or a public company or government company or unlisted company, whatever it may be. Okay, it is a compulsory to prepare all these statements at the end of the year. Okay, now what is a trading account? Now you see that what mean by the trading account. This is a nominal account which debits all direct expenses, purchases, wages, etc. and credits all the direct incomes, sales, closing stock, etc. Okay, what mean by the trading account? This is a nominal account which debit all expenses and incomes, means which are directly, which are in nature, which are directly related to the business. Take an example, in the furniture business, in a furniture organization, means the organization which is engaged in the selling the furniture. The organization which is engaged in the selling the furniture, that's why whatever the expenses are made on furniture, on purchasing the furniture, that will become the direct expenses. And whatever the furniture sold by that organization, it becomes a direct income. Means in a trading account, you take only the direct expenses and direct income. Direct expenses and direct income. Means, okay, first you have to see that what are the direct income and direct expenses. First you see that direct expenses. Generally, in a trading account, you take the opening stock, purchase and manufacturing expenses, factory expenses, carriage inward. Means the expenses which are made for means the direct means which are in the direct. Okay, already I given the example. I give another one example now. The business which is engaged in the selling of the manufacturing of the means also manufacturing means the laptop. Means what the expenses are made on purchasing the laptops or for the manufacturing of laptops. Whatever the expenses are made on purchasing the laptop, the business is engaged in the selling of the laptop. That's why whatever the expenses are made or paid on the purchasing the laptop, that will become the direct expenses. What the business organization gets the income on selling of laptop, okay, that is the indirect income. And producing the laptop, what are the wages, what are the salary? The laborers are engaged directly in the production of the laptop. The laborers who are engaged production of the laptop directly, who are expert in the production of the laptop, what are the wages or what are the salary are paid to those laborers, that is the direct wages. Means that wages will be taken under the trading account, that is treated as a direct expenses. Means only the direct income and direct expenditures are taken into the trading account. Actually, this is the nominal account. This is the nominal account. After closing all nominal accounts, means transferring all nominal accounts, balance are transferred to the trading account. The balance of wages account is transferred to the trading account. The balance of purchase account is transferred to the trading account. The balance of the factory expenses are transferred to the trading account. The balance of manufacturing expenses are transferred to the trading account. Means all balances of all nominal accounts are which are in the nature of direct are transferred to the trading account. Okay, now next one. What is gross profit? The profit which is found out from a trading account is called as a gross profit. We get gross profit when the closing stock and sales exceeded over the opening stock and direct expenses is called a gross profit. What do you mean by the gross profit? The profit which is found out from a trading account is called as gross profit. We get gross profit when the closing stock and sales exceeded over the opening stock and direct expenses is called gross profit. When the direct income exceeds over the direct expenses, then we will get the gross profit. When direct income exceeds over the direct expenses, okay, then we will get the gross profit. Okay, next one. What do you mean by what is profit and loss account? It is a financial statement pertaining to profit and losses of a business prepared at the end of the year to know the net profit and losses. In this account, indirect income and indirect expenditures are taken. The profit and loss account is also nominal account. Trading account is also nominal account. Profit and loss account is a nominal account. The balance of all nominal accounts which are in indirect nature. All balances of nominal accounts are transferred to the profit and loss account, whether it is the income or expenses. All indirect expenses and all indirect incomes are taken into the profit and loss account. The expenses are paid in the organization which does not support the business directly but indirectly support. Take an example. Paid salary to the accountant. Payment of a salary to the accountant. The accountant is not directly engaged in the business. That's why whatever the salary are paid to the accountant, it is indirect expenditure. Take another example, income tax. Means whatever paid the income tax at the end of the year or monthly or whatever it may be. Whatever paid the income tax which is not directly related to our business. It is based on our profit. It is based on our profit or net income of our business organization. Depreciation. It is an indirect expenditure. What you are paid the electricity bill, poll bill, stationery and stamps. Generally, these are the indirect expenses. And indirect incomes are taken also in profit and loss account. By selling the product, by selling our stock, what we get the direct income. After receiving the income from selling of our product, that amount will be deposited into the bank. That amount is deposited into the bank. What we receive the interest as income. What we receive the income as interest on depositing our amount into the bank. What we have received the interest. What we have received the interest on a deposit. Okay, that is indirect income. Take another one example. You are giving the property on a rent basis. You are giving the property on a rent basis. Means giving the property on a rent basis, this is not our business. This is not our business. That's why what we are receiving the rent from property, that is the indirect income. That is the indirect income. And also take another one example. Discount from creditors. Discount from creditors, this is also one type of indirect income. Means in time, if you pay the amount in time to the creditors, generally the creditors will give the discount. Okay, that discount will be income to the organization, but that is not direct income to the organization. That's why whatever you have income indirectly, which are not received on selling of our product, which are not received on a service, means by giving the one example, I can explain it. In a kirana shop, okay, purchasing the groceries, that is the direct expenses, that is taken into the trading account. But what we are paying the electricity bill, poll bill, rent of the shop, these are the indirect expenses. Those are taken into the profit and loss account. And what we are receiving income means by giving the property on a rent basis, means what we are receiving the rent, that is the indirect income, that is the indirect income to the kirana shop. That will be taken under the profit and loss account. Okay, this is a little bit information of the profit and loss account. Next one, we discuss profit and loss appropriation account. First, I have to prepare a trading account. Next, I have to prepare the profit and loss account. Next, I have to prepare the profit and loss appropriation account. This is the third step for preparation of final accounts of a company. The account of distribution of net profit among different sectors is called profit and loss appropriation account. The account of distribution of net profit among different sectors is called profit and loss appropriation account. Take an example. What the profit is distributed to the shareholder as dividend. This is appropriation of profit. This is the distribution of profit. Appropriation means distribution indirectly. Appropriation means distribution. Means what the profit is distributed into the different sectors, okay, that will be treated as a appropriation. Means the profit is distributed. The shareholders or the investor ask the question how the profit is distributed. By showing the profit and loss appropriation account, you can give the answer. The profit is distributed to the shareholders, means the equity shareholders or preference shareholders as a dividend. The dividend is given to the equity shareholders and preference shareholders. That is the distribution of profit. And some part of a profit is kept for reserve. That is also distribution of profit to the reserve. And redemption fund. Redemption fund means we transfer the fund, we transfer the profit to the particular fund. Okay, now what are the circumstances when the profit is distributed? We discuss one by one. First one, transferring profit to reserve. That may be capital reserve or general reserve, whatever it may be. The sum part of profit is kept for reserve, that is also appropriation, means distribution. Okay, how to transfer the profit to the reserve at 10% or 20% or whatever it may be. Next one, dividend. The dividend is distributed. The dividend is given to preference shareholders and equity shareholders. Okay, that is also appropriation of profit. Next one, redemption of fund. Generally, the business organization in the company, you have taken the amount, you have taken the loan from the bank. For every month, for every year, you have to repay the loan amount. For repayment of the loan amount, the amount is needed, the amount is required. That's why the amount is to be kept for repayment of the bank loan. Okay, the bank loan can be, the amount can be kept for the redemption, for the repayment of the loan. When I have raised the capital, when I have raised the amount by issuing the debenture, after certain period of time, you have to repay the debentures. Also, you have raised the amount by issuing the preference shares. After certain period of time, you should repay the preference share capital. That's why on that time, the amount will be needed. Okay, that's why the amount should be kept. The amount should be repaid after certain period of time. For this reason, you have to distribute the profit. You have to keep the profit for the repayment of the capital. That is also appropriation account. Next one, statutory reserve. As per the government guidelines, as per the some Companies Act and Cooperative Society Act and Banking Regulations Act, the some part of profit should be transferred to the statutory reserve. Example, in a banking company, at least 25% of profit should be transferred to the statutory reserve. In the sugar industry, at least 1% of profit should be transferred to the National Association. In the steel industry also, at least 2% of profit should be transferred to the international organization. Means there are some restrictions, there are some conditions laid out in the Companies Act, also in the some other organization regulations. That's why for these reasons, in this PPT, just I given the only examples. There are different circumstances, there are different examples to distribute the profit. Ultimately, what mean by the profit and loss appropriation account? Profit and loss appropriation account is how the profit is distributed. Means the account for distribution of profit, that is called as a profit and loss appropriation account. Means what the profit is distributed among the different circumstances, okay, that will be treated as a profit and loss appropriation account. Next one, what is the balance sheet? Balance sheet is the statement of assets and liabilities prepared with a view to ascertain the financial position of business as on a specified date. The balance sheet is a statement of assets and liabilities prepared with a view to ascertain the financial position of organization as on a specified date. When you see the balance sheet, automatically you get the idea what is the financial business of organization. When you see the balance sheet, automatically we get the information what is the financial position of organization. Somebody misunderstand that. Take an example by giving the one example how the somebody misunderstand the concept of a balance sheet. The liability side is 10 lakh and also the asset side is also 10 lakh. Somebody says that the total value of the business organization is 20 lakh. That is wrong. Liability side is 10 lakh and asset side is also 10 lakh. The total value of the business is rupees 20 lakh. Somebody says that, but that is a wrong answer. That is a wrong information. That is a wrong conception of the reader. The total value of the business is rupees only 10 lakh. Okay, now come to the reality of the balance sheet. Actually, there are two parts in a balance sheet. One is the liability and another one is the assets. Liability indicates how the fund is raised, from which sources the amount is collected. Liability indicates from which sources the amount is collected, the amount is raised. Asset indicates in which the collected amount is there. The application of fund, what for which purpose, what you have collected the amount, where is the amount? You have to give the answer in the asset. By giving the one example, you can understand how the balance sheet is prepared. When you have taken the loan from the bank, rupees 10 lakh. When you have taken the loan of rupees 10 lakh from the bank, that is the liability. Generally, it is shown at the liability side of the balance sheet. And the same amount is shown in the asset side. In which form the loan is taken? In the form of cash. In the form of cash. Means at asset side, cash rupees 10 lakh. Means the loan, actually have taken the loan how much rupees 10 lakh from the bank. At liability side, you show the loan from the bank at liability side rupees 10 lakh. Also, in asset side, cash how much rupees 10 lakh. Automatically the balance sheet is tallied. Means what the amount is raised, from which sources the amount is raised, the sources is indicated in the liability side. The asset indicates the application of fund, the application of the sources. Means for which purpose the amount is used. You have taken the loan, rupees 5 lakh. That is the liability. But you purchased the furniture rupees 5 lakh. That is the asset. Okay, how to prepare the balance sheet for the purchasing the furniture and also by taking the loan. Actually, I have taken the loan of rupees 5 lakh The pilot is liability as loan from bank. You are showing the liability at liability side, the loan from bank. Where the fund is loan, where the bank loan is there? In the form of furniture. You have purchased the furniture by taking the loan. That's why in asset side the furniture rupees 5 lakh and also the at liability side also bank loan of amount rupees 5 lakh. Automatically the balance sheet will be tallied. Means the balance sheet is at asset side, at liability side rupees also 5 lakh and asset side is also 5 lakh. Means it indicates the financial position of the company. The balance sheet indicates the financial position of the company on a certain date. Okay, somebody says that it indicates the financial position of the company for the whole year. That is wrong. How it is wrong? Generally, on which date the balance sheet is prepared on such particular date, it indicates the financial position. Take an example. If the balance sheet is prepared on 31st March 2019, if the balance sheet is prepared on 31st March 2019, it indicates the only financial position of the company on only on that date, on such date, what is that? 31st March 2019. It does not indicate for the whole year means the 2019. It indicates the only financial position on 31st March 2019. Please keep in our mind. When you prepare the balance sheet on 31st March 2020, the financial position of the organization, it indicates the financial position on only on that date. Means 31st March 2020. If you prepare the balance sheet on 31st March 2018, the financial position indicate on only 31st March 2018. That's why on which date the balance sheet is prepared, it indicates what is the financial position of that organization on a specified date. That's why I given meaning with the unspecified date. What do you mean by the balance sheet? The balance sheet is the statement of assets and liabilities prepared with a view to ascertain financial position as on specified date. Okay, that will be treated as a balance sheet. Okay, if you have any doubt, you may ask any question by messaging in my personal WhatsApp group. May ask any question regarding the basics and the introduction of the financial company, final accounts of the company. Thanks for watching till now. Thank you.